Good evening, everyone. My name is Kathy McCormick, and I'm board president of Prop Memorial Library in Old Greenwich, Connecticut. Thank you so much for joining us for tonight's program with local author Jim Campbell about his new book, Madoff Talks, which has received glowing reviews from Fortune Magazine, The Guardian, and many others. I want to also thank the members of the Prop Memorial Library Association, whose generous contributions make programs like these possible. If you're not a member, please consider joining. Details can be found on our website, propmemoriallibrary.org. I also want to take this time to thank Jess Reed and Craig Jones from Greenwich Point Marketing. They have helped us all year long with our Zoom programming, and without their help, we would have never been able to stay so connected to the community. So thank you again to Greenwich Point Marketing for all your help. Copies of Jim's book are also available on our website, propmemoriallibrary.org, and also through Diane's Books in Greenwich. We put a link to both of those in the chat. What else do we have to say? This program will be recorded, and we'll send a link to the recording in our follow-up email. And Jim has also graciously agreed to answer questions. So you can use the raise your hand function in the bottom right of your screen, and we will let you ask your question at the end of Jim's talk. And so now it's my honor to introduce local resident Jim Campbell. Jim is the host of the nationally syndicated radio show Business Talk and Forensic Talk with Jim Campbell. He's the assistant news director of 1490 WGCH and is known for his hard-hitting interviews of leading figures from the worlds of business, politics, and sports. Known for first, Campbell snagged the first executive interview with the former New York governor, Eliot Spitzer, after his resignation, and the first interview with Tyco CEO Dennis Kozlowski after his release from prison, and the first broadcast interview with former stock analyst Rumi Khan, a government informant in one of the biggest insider trading busts in American history. Thank you, Jim, for joining us. Welcome.
Thank you. It's my honor, and I see some people I recognize up there, so I'm particularly happy folks are coming out on a Wednesday night, even if it means just going to your living room. I got to thank Louisa Green first, because she is so nice to me, and she jumped on, invited me the minute the book was coming out. Does so much for the town of Greenwich, on the board of the library, the Boy Scouts, etc. Kathy for inviting me, Kevin McCarthy, director of the library, for inviting me, Jessica Reed for the technical support. We even had a rehearsal last week. She's so efficient. So I'm honored to do this, and I think people are going to be stunned at how little they know about the Madoff story, despite the fact that the general perception is it was one guy operating behind a curtain who pulled off a big Ponzi scheme. And actually, he was enabled over 40 years by all kinds of ways, from co-conspirators, who I call his big four, which are his major investors, who actually bailed him out on occasion and came to have the power to extort him. The willfully blind conspirators, which was the hedge funds that fed all that money into him and knew something was up. What I call the unwitting conspirators, the SEC and SIPC, who SEC had 5 investigations they missed on. And the witless co-conspirators, his high school graduates he hired in the 17th floor of the Lipstick Building, 2 floors under his legitimate business, with top-notch business school graduates. So this has been kind of a whirlwind. Let me give you, my first question I always have to answer is, we had nothing to do with the timing of Bernie's death. That I was coming home from WGCH, having been up since 4:30 in the morning and doing the morning news show, and at the intersection of Sound Beach and the Post Road, across my phone it goes, Bernie Madoff passes away. And I was a couple hundred yards from the Shell station there. I was going to stop and get a snack. My phone starts exploding, and texts and phone calls. I get to the snack place, and I'm told that I'm on Bloomberg radio in 10 minutes, and that they'd already announced it on their website. So I had to go sprinting home to do a 7-minute interview with Bloomberg that they knew about before I did. And then I got the New York Post called and asked me to write. This is the middle of interviews now. The New York Post asked me to write a 2,000-word article in the afternoon for the next day's paper that the editor said he would tease on the front page if I would get it done. And I'm like trying to figure, how do you write 2,000 words, in a short time span? But he was good to his word. The next day it was on like page 5 or 6. I got out of bed, I looked at the New York Post mobile app, and it was the #1 trending article at the time. Then I got some more of the tabloid type calls. The Daily Mail of London called me and asked me if I knew who was getting the body of from the Bureau of Prisons. And I turned, I said, "You aren't kidding me, aren't you? You're not asking me that question." And no, they weren't kidding. And I said, "Well, I can't answer that question. I don't know." And then I got some other bizarre ones, and a picture that was in one of the articles of the American Express bill. You may have seen it, and it shows Ruth Madoff charging $57,000 in 1 month on the corporate credit card. It was a private firm. It did not mean she knew about a Ponzi scheme, but it was kind of like looking at the firm as a piggy bank. Well, anyway, that got picked up by one tabloid, and then I saw it all over the world. All these foreign articles that would come in, I'd recognize 57,000 and Jim Campbell. I couldn't recognize another word. It was all some foreign language, whether it was French, Spanish, and on and on. So I kind of learned. Not one of those tabloids called me to find out. It was just 57,000 was all across the world. So now we'll go back to 2011. How did this thing ever happen? I'm nobody. They don't know who I am, the Madoff family. And all of a sudden, Bernie's talking to me for what turned out to be 8 years. And I was taping a radio show that was actually going to be live. And the day before, the author who had worked with the family on a book said that Andrew Madoff would talk to me off the record. And so I called him, and I right away jumped all over him. I said, "Your father gave you $2.2 million to buy a co-op in the last months before this went down. Shouldn't you be giving that money back right away?" And then he stunned me by saying, "Absolutely." And he seemed very open and answered any question I wanted to. And then I said, "The show's on tomorrow." He said, "Well, you say it's live. I'm going to listen. And if you say the same thing, I want to make sure that you do." So he listened. And the second coincidence, which everybody knows around here, Old Greenwich, Ruth was moving his mother from Florida to Old Greenwich. So I offered to take her out to dinner, to lunch. And so Andy set it up at the beach house. It was in December. There was no one in the restaurant when we got there. She arrived in sunglasses, which she did not take off even inside of the restaurant for a while. Then orders a chef salad, which she proceeds to devour like she's not seen food. And we ended up hitting it off. She was incredibly nice, good chemistry. We were walking out, and I said, "Can I get a picture of us, Ruth?" She stops, and she goes, "You're wired, aren't you?" She thought I'd set her up. But once I convinced her that I was not wired, that it was a legit conversation off the record, she hooked me up with Bernie. And I told her, and it took about 2 weeks for the prison email system to approve us coming together. And so I told Bernie, Bernie said, "Andrew and Ruth have vouched for your sincerity, so I'm going to talk to you, hopefully to dispel the myths about this and the misperceptions." So he obviously was going to try and tell me his version of reality. And ironically, Andrew Madoff, on December 10th, Bernie confessed the afternoon before he was arrested by the FBI. The minute Bernie confessed, Andrew never said another single word to his father ever again. So when Bernie vouched for Andrew, he was either making that up or Ruth had conveyed that. And Bernie and I go back and forth with these beautifully 7-page handwritten, exquisite handwriting letters, and as well as emails once he had a stroke there, and I ended up with about 400 pages. And that's how we got to where we got. I told Bernie at the end of that, I got to figure out what to do with all this. I've never written a book or anything, but there's got to be a book in here. And I got an agent. We searched around for a publisher, and there was no interest. I got another agent, and he sold it and signed a contract with McGraw-Hill inside of 1 week. And so that's what started. And I told Bernie, "I'm going to vet every single word you said." And he said, "Jim, I accept those conditions." Probably to his regret, but that's what he did. So that leads us up to the story now. And I try to convey first off that this was not an event that happened alone, that this could have been stopped in 5 minutes in 3 different ways, at least, that I uncovered, of which it actually lasted for 40 years, which, if you know anything about a Ponzi scheme, they last for very short durations, and they inevitably have to fail because you have to have more money coming in the front door that is going out the back door because there's no real investment activity going on. Some investors' money is being used to give to other investors. So you've got to have more and more people. So that's why they have to fail generally. And if not for all these co-conspirators in the various ways I addressed, he would have been caught relatively quickly. Another thing that surprises people is that normally the wizard behind the curtain, and in this case, Bernie was on the 17th floor of the Lipstick Building behind locked doors that his own sons did not even have access to, and they ran the 19th floor business, which was 100% legitimate and ethical, called the market making business. They did trades for discount brokers, customers working for the firms like Schwab. So anyway, Bernie is downstairs there, and he wasn't the guy that made all the money. A guy named Jeffrey Pickauer, who was the biggest of the big four, as Bernie called them, took $7 billion out of that hedge fund. That's 9 times what Bernie Madoff stole to hide into he took it and hid it in the back door of the market making business when it was having solvency problems. Plus the family obviously took a lot of extra money out when Ruth is charging $57,000 a month. But this guy Pickauer is the guy that made all the money. The 3 other guys each made $1 billion or 2 as well. The most unfathomable thing to me was that you would think logically that what happened was Bernie's running this very legitimate business. He's very highly regarded amongst the regulators on Wall Street. He treats his customers with great respect. And you would think, well, something bad must have happened. He must have lost some money. And while it's not legal, he says, I'm going to double down. It's a gambler's mistake. Do a little Ponzi or something to keep it alive. We'll catch up, pay off whatever happened, and then we'll be back and no one will ever know what would happen. And Bernie told me a story just like that he'd never told anybody else. He didn't even tell his lawyer this story. And his lawyer, Ike Sorkin, I spoke to because Bernie waived attorney-client privilege, which is unusual, as you know. So I said, oh, okay, Bernie, so at least there's some logic, even though you made a huge mistake because it was criminal. Go in and start vetting everything, read the forensic reports of the consultant. I talked to the FBI, bankruptcy trustee, and lo and behold, Bernie, at the same time, he was building this successful business, which became the #3 market maker from zero, broke the monopoly of the New York Stock Exchange, was building simultaneously the biggest criminal enterprise in Wall Street on the same in the same time, 2 floors down, different types of employees. He hired each for each. He found honest, competent people, and he found people he could manipulate and didn't understand what he was doing. And he ran them both. So you can imagine how compartmentalized his mind was. The legitimate business was worth $3 billion in and of itself at peak, exclusive of any hedge fund. So you have to go figure. So these big 4 guys came to have this power. They could extort returns from him. He grew to hate them. And in a sense, this was a reverse Robin Hood because he had a whole bunch of what I would call average, not high net worth investors who were putting in money all the time over 30, 40 years. And they were of average wealth and they built it up over time. A Ponzi scheme is easy to detect, by the way, because all you have to really ask is, where's the money? Are you trading with anybody? Who are you trading with? Not much more than that. Where's the bank account? Do you have an accountant? And by the way, he had an accountant who was a one-man band in a strip mall in New City, New York, wasn't even legally licensed to do big public accounting. JP Morgan, his bank at one point said, somebody should call to find out if it's a car wash or not. And it turned out it was a laundromat because he was laundering money. He was also invested with Bernie. So none of these simple Ponzi tests were done. And why is that? We'll go to the SEC. They conducted 5 separate investigations of Bernie and never uncovered the Ponzi scheme, never really uncovered the 17th floor, never really figured out that they were charging him with the same, what they expected was the same offense in each investigation, even after they'd cleared him the time before. They thought he was doing front running. And front running is when you're a market maker jumping right in front of your customer, because if you know if your customer is going to order IBM, that's a bullish signal, right? He knows what the customer is going to do. You jump right in front of it. You take a little slice because you know the market's going to go up. That's how they thought he was able to guarantee results. because he was cheating and he knew what was going on and he was jumping right in front of his own customers. The funny thing was, Bernie never once ever did front running, never once would have done that to his customers. And we can talk about Robinhood if anybody's heard of that, because they have abused their customers in a way that Bernie would never have. So as the SEC misses investigation after investigation, there's some whistleblowers. Harry Markopolos, you probably know of. We're looking at this starting in the late 90s. SEC didn't understand Harry, and they didn't want to listen to him. They thought he was a disgruntled competitor. But to give you some examples, here is a way that the SEC could have solved it in 5 minutes. Bernie, in fact, told me he gave the SEC his account number at the Depository Trust Company. All you have to know is that's a clearing and settlement entity that all your trades have to go through. And he gave them the account number, which was 0646. And the market making business, every trade could be traced through there. And FINRA and the SEC did that, no problem. So Bernie gives them the number, and he's expecting them to ask, okay, we're calling about his investment advisory business. We're told it's a sub account in the 646 account. And they would have found out in 5 minutes there was no such sub account. There was never any IA or investment advisory or Ponzi scheme trading ever to go through the DTC. And guess what? The SEC didn't make the phone call, even after he gave them the information. It's pretty amazing. The whistleblowers knew Bernie's strategy, called a split strike conversion, sounded very complex. I could never find any of his victims or even the traders on the legitimate floor up on 19 who could explain it to me. But you know what? Which is what he designed it to be. But if you understood it conceptually, it was very simple. It should have mirrored the stock market, which means highly correlated, which means most of the time it should perform as the stock market does. So the reason that Harry Markopolos could figure out within 2 hours was that he found that it was actually 5% correlated. It mirrored the market 5% of the time. In other words, it could not do anything that Bernie had said. And by the way, if it had mirrored the market, it couldn't have gone up every month. Bernie never had a negative month in 20 or 30 years. So his whole strategy never made sense, even if you could understand it. And no one apparently did, and the SEC did not. So where did all this money come from that was going into Bernie's hedge fund? It was coming from what are called feeder funds. And these are hedge funds whose job it is to say, I have Louisa's money. She's very conservative. I'm going to look across 5 or 6 portfolios, and I'm going to put her money exactly with what fits her objectives. In other words, I do a lot of due diligence that I promised to Louisa before I take her money, and she feel comfortable with me, and then she trusts me to go put her money in there. In return for that, the hedge fund charges its normal fees, which everybody in Greenwich knows is 2% of assets, 20% of the gains under this is the hedge fund capital. And the feeder fund just takes 1% for due diligence and helping do administrative work. These guys, what they ended up doing, Bernie did not allow any due diligence, which right off the bat would ask you, why would the hedge funds accept that? Well, maybe because Bernie passed on all those lucrative fees that I just mentioned back to the feeder funds, basically so they wouldn't ask any questions. So he was basically taking money in, taking no fees for it other than stealing it as a Ponzi scheme and giving hundreds and hundreds and actually billions of dollars to the feeder funds in what are really kickbacks, if you will, which they call fees. And in return, they didn't ask any questions. Not only did they not ask questions, Bernie made each of them sign an agreement that they had no discretion on the investments. At the same time, he told the SEC that he had no discretion on the investments the feeder funds did, and all he did was execute trades. So you can see you have the SEC missing investigations, never having the right people. They never looked to investigate a Ponzi scheme. You have the feeder funds pouring this money and never asking Bernie any questions, so that that they would just get fees in return for taking people's money, often not even telling them they were putting it with Bernie's fund, and often not telling them that they were only with one fund, all of it with Bernie. They were supposed to be diversified. I'll show you some slides in a bit that show you how he pulled this off, but he had a small staff on the 17th floor. These were high school graduates, unsophisticated, didn't understand Wall Street, and they backdated every trade, which means the trades were all fake. They didn't realize it was totally illegal. They never realized it was a Ponzi scheme in 40 years. And just to show you how Bernie knew how to hire his administrative assistant, who was a good source of mine on the legitimate floor, she's 100% honest. He paid her $125,000 a year with no IRA. Her equivalent job on the 17th floor, she did all the phony trading for Pickhour, for instance, who would dictate his own returns. Her last year, Bernie paid her $670,000 salary, and she had a $58 million IRA. Had the same job, basically, as Eleanor. So you can probably understand why she didn't talk, nor did she ever figure it out, because all of her money was in the firm when it went down. So she obviously didn't know it was a Ponzi scheme. Thing is blown up now. All these folks have lost money. They lost 19.5 billion they'd invested. They thought, based on their financial statements, they had $65 billion. So you turn to SIPC. What is SIPC? The Securities Investor Protection Corporation. It's the equivalent of the FDIC. The FDIC has been around since the New Deal and has never failed to pay the money that it says it owes up to that limit to any investor ever, and never cost the US government a dollar. SIPC, on the other hand, did not tell people, certainly these innocent victims, that they didn't intend to cover a Ponzi scheme. They said, if there's no real investment activity, so we can't cover it. And furthermore, since the gains are fake, we're not going to recognize your final statement. We're going to recognize only the original investment value. So imagine, you're a Merrill Lynch client opening up your statement and finding out that number isn't real. And furthermore, that the SIPC doesn't really intend to cover it. And furthermore, they didn't have enough money to cover it. They'd been told 16 years ago, before Bernie went down, that by the GAO, that they lacked enough money to handle a major Wall Street brokerage crash, and Bernie's firm only had 230 people in it. So what did SIPC do? Not one dime of the payments to the Madoff victims came out of the SIPC fund. Instead, they went to Madoff victims. Remember, everybody lost their money at the end. Any Madoff victim that had withdrawn more money than he'd put in over the years, they went after to claw back money. Any Madoff investor that left more money in other words, hadn't taken it out, they were to get that money. And they basically raised $14 billion that way, taking it from one set of Madoff investors and giving it to another set. Never struck me as very fair. It was legally, case law supported that. But a lot of victims not only had money clawed back that they had lost, even though over the 30 years they may have taken out more, they may have had no money left. They had their homes gone after, they had their IRAs gone after. The average age of a Madoff victim was 75 years old. And some of them had to go back and work in Walmarts and things like that. And in my opinion, if the SEC failed 5 times and SIPC didn't have the money on hand, really honestly, to pay them back, why shouldn't these have investors been considered out, since the government basically had cleared Bernie as legit? At the same time this was going on, the TARP program was putting $800 billion into Wall Street firms the exact same time to keep them alive, while the Madoff victims went down and went through court proceedings for years over money that had been clawed back. Now, there's one other area that also totally missed this Ponzi scheme, and that's his bank, JP Morgan. The only entity anywhere that actually could see into Bernie's account and see how much money was really there. Bernie told me that he never had more than $5.9 billion on deposit at what was called the 703 account at JP Morgan, the last 3 digits. The rest was supposed to be in the market, or it was fake Ponzi money. And JP Morgan didn't even clearly understand that it was for the investment advisory Ponzi business. They thought it was legitimate market making account, even though that account had been in Bank of New York for 30 years. And if you have a equity strategy, which his was, it's quite simple to say his bank account has got to show payments for trades, counterparties, and it's got to show dividends coming through it. There should have been $4 billion of dividends that flowed through this account, and there should have been payments to counterparties nonstop. Instead, $170 billion flew through that account. $170 billion. There wasn't $1 of dividend ever deposited. There wasn't one payment to a counterparty ever made, and JP Morgan never uncovered that. And that's only one of the three things that JP Morgan screwed up. I have to tell you, it's kind of painful. I went to Tufts with Jamie Dimon, who's the CEO of JP Morgan now. And I got to tell you, testament to his character, I asked him if I could come in and speak to the people there, even though JP Morgan completely screwed up. And he let me do it. And just this week, I offered to give him a book. And I told him I would not be insulted if he blew it off and that he wasn't going to like it. But he has taken the book. And at the same time, this SIPC trustee that I was just telling you about, his claim to fame is that they raised 14 billion back out of the 19. So he claims to be the most successful Ponzi scheme retriever, despite the fact that he got the money from other Madoff victims. He refused to see me 3 times because the truth is more complex than he tries to parlay it. That 14 billion, he took $2 billion in fees and expenses off the top of that. That came out of the SIPC fund, not the Madoff victims, but that's still $2 billion that could have gone, in my mind, the bulk of it to the investors that lost all their money. The final things before I show you some slides on this scheme in many ways was also a tax fraud scheme. There were 2 conspiracies in my mind the government never pursued. And one was these biggest investors, these big 4 and the others, were doing major criminal tax fraud. Pickauer himself was calling up and he would say, I want this gain for X, Y, and Z, go backdate it. And then he'd call up during tax season, I need these tax losses to offset the gains. No one has ever been prosecuted criminally for that. None of the hedge fund managers who did the due diligence and pummeled the money in there without asking questions have ever been penalized criminally. The other thing was the international feeder funds, and one in particular, you'll see her picture later on, funneled incredible amounts of dirty money in. In other words, they were doing money laundering for Russian oligarchs, Eastern European oligarchs, Colombian drug lord money. To the extent that the Colombians threatened JP Morgan when JP Morgan was trying to take money out of a Madoff hedge fund. This again, the government decided never to go after these folks. And I mean, it's a little dangerous to go after these guys. But on the other hand, it was grossly illegal. Bernie said to me, he didn't even know who was in the international, coming in through the banks and feeders over there. I'll talk briefly about reforms, and then I'll show you some slides, and you can shoot questions at me. The first thing, though, when I started there, I had 30 reforms at the end. The first thing was that individuals, and I tried to say that individuals need to think like a doctor in terms of that Hippocratic oath: do no harm first. Nobody understood what Bernie was doing. Secondly, Bernie was telling people on January 1st what their return was going to be. Anybody that tells you they can guarantee you a market return in January, you should be running the opposite direction from them because it cannot be done. And thirdly, sadly, you can't necessarily assume the government is going to be there for you. The SEC did not find it. SIPC did not have the funds to reimburse people and did not feel they were obligated to, since it was a Ponzi scheme. And so you need to take responsibility for your own investments in a sense. You need to be conservative. You need to understand it. And my hero was Warren Buffett. The market has gone up 9% a year for 100 years. Bernie was paying about 11% in the last few years. Buffett would say invest periodically, regularly in a low-cost index fund. And I would say take that 9% and sleep at night. In the end, hundreds of people should have gone to jail, and literally only a handful did from the 17th floor. And when Bernie passed away, it was the last single person in prison for what is the biggest Ponzi scheme in history. And if you'll let me now, let me show you now some slides. When I did the CBS Sunday morning interview, Jim Axelrod was a correspondent, and he found these documents so compelling that we just sat around the table and did what was called the B-roll, going through these things. We were going to walk through Old Greenwich, where I'd first had lunch with Ruth, and Ruth would go to the bagel shop, the upper crust bagel shops. We were going to kind of do that kind of thing, and she would have walked at the beach. But he got so into the documents, so I like to show them. This is the Post article, by the way, that was the 2,000 words. And what I thought was great about the Post, he simply could not accept any losses. That is the fundamental issue here with Bernie. He psychically could not tolerate losing money. So the legitimate business, he was making commission money, right? Which means the market's up, the market's done, he's making his commission. So he goes into this investment advisory business and holy cow, I don't make money on every trade. So he stopped trading and made it up. He could not live with it. And they got that, they put that headline in there. I thought that was a very good catch on their part. This is the lunch outside the little pub with Ruth when we were leaving. And you'll notice she was comfortable taking this picture, unlike the first one where she thought I was wired. This was after a couple of years knowing her. We would have regular lunches and then a lot of text messaging and emails. And you know, she lost $800 million in net worth. She paid $100 million to the Justice Department. They left her with $2.5 million, of which 500,000 of that went to lawyers. And she's the most resilient human being. She had no complaints about it with me. She said, we're from Queens. We're average people. I don't care. I'm now driving a beat up car that was dangerous when it came around corners. She moved into an apartment eventually that she was paying $2,900 a month. She had to turn in every receipt to the bankruptcy trustee, over $100. And she was just functioning. She was very estranged with Bernie by then, having been cult-like devoted to him. And also telling me, frankly, she was upset that he had some affairs that she found out about during this whole process. They were dating since they were 13 years old. This is Andrew Madoff, who was, of course, the first person I met, and that's his girlfriend, Catherine Hooper, who is the person that let me into access to a lot of people, and who told me that despite her belief that she thought, to the depth of her soul, she believed Andrew was innocent. But she told me, she says, if you find it, Jim, I'll accept it, which I thought was pretty amazing. And she was true to that. She just sent me a letter a couple of days ago saying she loved the book, and she and basically thanked me for pursuing the truth. This is what freaks the CBS Jim Axelrod out. On that one side is the front page and the end page from Jim from Regards Bernie. That's his 7-page spaced letter. That's the first one, which starts off, I'm going to go on my son's and wife's recommendation. And these letters would come out with just compulsion to rationalize his behavior. On the other side is a 1-sentence letter to Andrew and Catherine, who you just saw. And it says, I'm so sorry, Dad. Not even love Dad, but I'm so sorry. That was his confession to them, or his apology, I should say. And that's what he could get out. He didn't know who the heck I was. I'm Jim Campbell, and he's writing these passionate, 7-page letters. And he could write his son only a 1-sentence letter saying, I'm so sorry. So it says a lot now. Here's what an actual Madoff statement looked like that every month they would get. This is an actual victim from Chappaqua, actually. From Armonk. And as you'll see, these are all legitimate big cap stocks and a Fidelity fund, U.S. Treasury market, Treasury bills. And there was so much detail that it snowed his investors. Every single thing on this page is fake, except for the name of the victim and the name of the firm. They would come stuffed with trade confirmations. He did tons of trading. They would come chronologically in order. It gave the victims a real sense of this guy's so ordered, so structured. And remember, he said he passed on all those management fees because he was just taking commissions. He wasn't really making the decisions. He was just doing the trading. Well, where that yellow box is where the commission is supposed to be listed. And you'll notice it's empty. So some of the fakery he didn't quite get. There were also trade confirmations on dates and the stock exchange was closed, but people didn't figure that out. There were also confirmations with the prices that did not match anywhere in the range of that day's trading. So there were ways to have seen that it was fake. This is one way. I talked about the depository trust, right? He had, which is where everything has to clear. So everything's got to be there. He had a fake system that showed a live feed to the depository trust. And if you'll notice, you can't see it closely, but this is for the date of November 30th. It's a security position at that time. But the investigators found that this was actually entered in the computer in December. So literally, he was making up the live screen showing positions for trades that happened, that he actually typed into the system a month later. This was how he did the laundering of money out of the Ponzi scheme into his office. And the 703 account at JP Morgan, in this example, this is an actual example, took 4.3 million out of it, deposited into his personal account at Morgan Stanley. Once it was in a personal account at Morgan Stanley, it went to the market making account, which was at the Bank of New York, which was the legitimate business's bank account. And then it went into the back door of the market making business hidden in the trading profit and loss statements. And this was profound because there was $800 million of what looked like trading losses until this money was pumped in. Well, who ran the trading desks? Andrew and Mark Madoff. So it was very, on the surface, incriminating that how could they not have known that Bernie fudged all this money through there? 800 million bucks is a lot of money. And I was able to find literally the one person in the firm that saw the actual P&Ls before Bernie fudged them that could vouch for whether Mark and Andrew had seen it. And this story is in chapter 8. It's really touch and go story. It's I think you'll get a kick out of reading it. I also go through whether Ruth knew or not, and how she was, what were the question marks there. I'm the first guy that made a determination on the family's complicity on knowledge of the Ponzi scheme. Now, this was what Bernie called, and I'm not Jewish, so my Yiddish is bad, the Stup account file. And this is what would happen. Bernie would promise you, in this case, it's 18% for the year. So we're in November, and his fake trading has you up for about 9%. So all of a sudden, he's got to get you in 1 month to 18%. The literal translation of a stup is to push up. It's slang for sexual intercourse. And what he was doing was, in the file, was putting whatever it would take in trades to push up to that 18%, which means he might have to show 100% gains through the stup file to get Louisa's 18% that he promised. And this was going on for decades. These are the actual IBM AS400s that were out of date in 1980 that he was using to run the $65 billion scam. I took these pictures. The FBI turned them back to the forensic consulting firm, and they were locked in a closet. And they let me go in the closet and take pictures of this machine. Just think, $65 billion. This machine, all it did was print out fake stuff. There's the spreadsheet that Harry Markopoulos figured out everything was fake in 2 hours. On the right, which is interesting, is there is a fund that that was actually identical to Madoff's called Gateway. It's a mutual fund. And that blue line represents the actual results from Bernie's strategy if you did it legitimate. That red line is Bernie's fakery. And if you notice, it's straight up. no investment line looks like that. And you know what, whose line that really is? That is the New York Mets Sterling Equities Madoff results, because they had their account with him, and they had 483 accounts with Bernie. And that's what theirs looked like. Over this time period, Bernie's went up 48%. The actual other one went down 20%, and they were the same strategy. So you could have seen just by looking at a publicly available mutual fund that it could not have been done. This is the infamous American Express charge that Ruth charged $57,000 on that month. There's all kinds of names of folks in the family who did not work at the firm, who were basically using the firm as a piggy bank. The great irony is this is Bernie's card as the holder of it, and he was charging $0 on it, but everybody else was jumping into it. Now, remember I mentioned that accountant in the one-man strip mall. Well, Bernie had all of his tax stamps and stationery in his warehouse out on Long Island because Bernie did his own taxes. So it was they found all the equipment, and that's the guy's name. Also found in the warehouse was all these lottery tickets, and nobody knows what these were for. But to me, these represent Bernie's desperation, trying to figure out how to get out of it. Because he told me that at the end, Jim, he was hoping there would be a nuclear attack on Wall Street so that it would wipe out all of his records. That's how he was thinking. That's how stressed. So I wouldn't be surprised if he was buying lottery tickets at the same time to try to figure out how to get out of it. Now, this is the international money laundering story. This is Sonia Cohen. She ran the money laundering feeder fund. She owned a bank called Bank Medici in Austria that was basically taking money out of Russia to Cyprus to her bank and then into Bernie. And the scary thing is Sonia looks like Bernie. We call her the evil soulmate. And she's also never been criminally charged or anything, but she has been, she had a lot of money clawed back from her fund. Now, this is how I ended. I dedicated the book to my father, who I say gave me the moral foundation that Bernie Madoff so sorely lacked. And what I tie this back to is Eleanor Spilleri, who I mentioned earlier, was his legitimate, honest secretary. And she was friends with all the folks down there. They came up at the same time, they grew with the firm. And she said to me that she used to be absolutely tortured. What made some people go one way on a path and some the other way? And in the end, this thing is no more than a morality tale, and a tragic one at that. As you know, Mark committed suicide, Andrew died of cancer, and there were other suicides as well. And so to get right down to it, you know, the decision to take that path, even Bernie had two paths, right? He had the legitimate and the illegitimate. So it's really a tremendous story, and I hope that gave you a little bit of a flavor of it. As we've said, that Diane's Books has the book there because I think you'll find it a fun read, and I think you'll get the message that I try to get across. With this wasn't one man's scheme. This was a failure of the system, and he was enabled to get this done. And you may be stuck with more of me because Netflix is bidding on my book, and I'm supposed to hear literally later tonight or tomorrow. So you may see this on Netflix, which, yeah, thank you. That would be kind of exciting for a guy who's never written a book. So I have a face for radio, so hopefully you won't see me. Now, does anybody want to shoot questions at me?
Jim, we have two questions in the chat, actually, to start with. Louisa asks, she says, a question for Jim, and this is during your presentation. Why do you think these investors didn't analyze their statements? I find the statement for the person in Armonk fascinating. Why do people continue to be swindled by these Ponzi kings?
Yeah, you know, I would ask the victims if they went through their statements, and often they did. And because they look so official, I know some that went through every single statement because these con firms, there might be 50, 60 in 1 month. But the other thing is that this was an affinity crime. It was 85% Jewish and Jewish charities. And this whole network was communicating and going in. I talked with Jeff Matthews today. He was a hedge fund. He was from Greenwich. He ran a hedge fund for 23 years. You know what he told me today? He's one of the most honest people I've ever met. He told me he had 80 investors over those 23 years. And in those 23 years, precisely one investor asked him what he was doing. None of the others did. It was all his reputation. Bernie had a pristine reputation, and he was called the Jewish tea bill. He was as secure as the US government. He would deliver no matter what. And it was a con. And now how does that excuse the feeder funds? Because to me, that's a real question. These guys were being paid to be experts and to promise to Louisa they had done that. They'd asked the questions, they'd verified it. And by the way, Bernie did not allow any independent custodian. That's something that you should always check on, because an independent custodian has the assets. So they're there. They know the trading is there. They can't be hidden. Bernie wouldn't allow that for obvious reasons, and never did. So people want to also believe it. There were a lot of people who knew something was not right. But you know what? Maybe he's doing a little front running. Maybe I'm going to look the other way. He's our crook. Happens all over Wall Street. You know, let's just look the other direction. And then there were more that knew he was lying, didn't know it was a Ponzi scheme. And those guys, in my mind, are complicit in that sense. But I come back to where you got to ask those questions. You got to understand the strategy. If you can't understand it in about 2 seconds, something's wrong. And he designed it that way. He admitted to me he would try to explain stuff so no one could understand it. And the funny thing was, the strategy was completely conceptually easy, and it couldn't do what he said it could do. And nobody seemed to get it. Not even the SEC. By the way, the SEC has a group in Washington that does that. They look at investment returns and results. They figured out in a couple of hours, about the same time Harry did, that it couldn't work the way Bernie was saying. And the message never got back to the examination team on the ground because the SEC was so poorly coordinated. Nobody spoke to each other. The branches didn't even talk to each other. So that message never got back, along with the failure to call the DTC for 5 minutes. I hope I answered that, Louise. I'm kind of long-winded, maybe.
Jim, next question from Sandy is, bottom line, you explain what he did, but why?
Good question. I think psychologically, when I talked about once you accept that he didn't do it because he got in trouble and that he made a mistake and that he took the wrong path because he lacked the courage morally to get out of it, that he did them at the same time, that's when it becomes, so hard to understand. So obviously he has tremendous powers of psychological compartmentalization, which, by the way, he had no insight into. The prison shrink had to tell him that, even though it seems kind of apparent, doesn't it? And so when he was successful in the market making business, making commissions, and then he could not accept losing money on the other side, he didn't know what to do. And this is where he lacks remorse in his mind. In his mind, he was pressured relentlessly by greedy investors. They wanted returns, always positive, always up. He had to deliver. He gave his sons millions of dollars to buy homes when he had no cash because he couldn't say no to his sons. It could not become apparent that he couldn't deliver anything. He saw himself as a victim of his investors, particularly the Big Four's greed. He said to me, Jim, I am a product of the corrupt culture of Wall Street. And if you've never managed a high net worth person's assets, you won't know what I'm talking about. These guys cheat. They don't pay their taxes. Their money's offshore. And all this was deflecting responsibility. He could not take responsibility for basically anything. It was always someone else's fault. And it was always pushed on to somebody else. When he says these were greedy investors and everything, who was the person telling them what the returns were? Who was the person making up the returns? Who was the person giving them everything they wanted? Who was the person that bribed the feeder funds? Bernie.
Jim, Carl asks, do you think his biggest individual investor, Carl Shapiro, knew what Bernie was doing or suspected anything?
Well, first off, Jeffrey Pickauer was his biggest. Carl Shapiro was one of the big four. They obviously knew he was short cash at periodic times because they bailed him out. It's not likely they knew it was a Ponzi scheme because they left their money in there too. Although, when you look under the hood, they did a pretty good job of not having much there when it ended. But I think that they were completely complicit in the tax fraud. As I said, Pickauer called in his own results as he wanted. He actually dictated his own capital gains. But the smallest of the big four, a guy named Stanley Chase, he never, not only did he not understand the strategy, he said, "Don't tell me, I don't want to know what it is, but you may not lose any of my money." So, you know, and Bernie never did. So he did.
Jim, Louisa asks, did Bernie ever talk about his prison experience? How did he adjust after living such an incredible lifestyle?
You know, we didn't end up talking much about that because of the fact that the assumption was I'd come down there at some point, and then the warden kept vetoing it. So we didn't get around to it. I will say that Bernie has a charisma, not a Gordon Gekko charisma, but more of like a grandfatherly, and he knows how to bring people in. And I think they thought he was cool there because he pulled off this incredible thing. And so I think he was doing all right. He followed everything about the case, all the court cases. You look at the stuff he gave me, it was unbelievable memory recall. He was reading all the transcripts. So he was staying very plugged in, and he had his story, and he stuck to it. He would admit to me the Ponzi scheme and the stuff that he criminally admitted. He wouldn't admit anything else. He would never admit that it started one day before 1992, ever. And he stuck to that story. And, you know, of course, it looks to me like it was going on since the early 70s. So he could never come clean, really. And I don't know that he ever came clean to himself. And again, he thought he built a legitimate business, and he thought that he wasn't given enough credit for that. And his investors, he at one point told me, he says, you know, anybody that thinks they're going to earn twice the Treasury bill rate should know there's a lot of risk there. So they should have known. And Jim, I warned him there was fraud, that there was a risk of fraud in these kinds of investments too. Imagine the gall of telling you that it's their fault that there could have been fraud. Why didn't they find it? It's hard to believe it. It's stranger than fiction. And also, I don't know if this is conveyed, but nobody knows this, do they? It's largely untold. So it's kind of good to get the word out and put the whole thing into perspective. I hope you do buy the book and read it, by the way, too. I have to put a small pitch in for that. And Diane's Books is your independent bookstore, so you're supporting a local Greenwich firm. And we have book plates, so I can send anybody who wants it signed, a signed book plate. And you're welcome to contact me with any questions, by the way, or if you want to talk directly or whatever, and you can ask as many more questions as you want. Anybody else? Or I don't know where Jessica is.
Yeah, I'm right here. I actually have a question, Jim.
Okay.
I'm just curious if the investigation and perhaps this book, if any of it has led to any like reform or policies or better investigations for other,
That's a good question. I've talked to Harry Markopoulos about this because Harry is the man that, basically first uncovered it was a Ponzi scheme, and the SEC wouldn't talk to him, as I said. After it all went down, the SEC did talk to him, and he says the SEC is very good now at detecting Ponzi schemes. And by the way, they come every month. People are doing Ponzi schemes. It's some kind of a sickness, I guess. But they are very good. He said that if one happened to offshore, remember we talked about all this hidden money and the money coming in, if one was done offshore, he thinks there could be another Bernie, but that's the only way. Now, other reforms, I in the book I talked to you about how SIPC and FINRA are both run or owned or funded by the brokerage industry. And I think they should be made independent like the FDIC, and they should be properly capitalized. And I don't think that investor feeder funds, hedge funds should be able to say they do due diligence just in their marketing brochure. I think there should be some legal requirements. So if Luis is giving her money, she knows he actually did follow these steps. But the assets do actually exist. This is the investment strategy he's following, and those kinds of things. The SEC needs to become more of a proactive cop. What the SEC, people think that's what the SEC does. No, what the SEC does is come in after the mess is made and try and clean it up. And I mentioned I don't know if you guys know about Robinhood, but Robinhood is very hot right now. It's an online broker that says they give free trading, right? Well, how do they give free trading? You know how they give free trading? They direct their trades to exchanges in return for getting a rebate for sending them that business, right? It's called payment for order flow. Guess who invented payment for order flow, basically? Bernie Madoff. But Bernie did not screw his clients on price. Robinhood was taking such a big rebate that their customers were getting inferior price execution. Get this, to the extent that they paid $34 million than if they'd gone down the street and paid a commission, because Robinhood was so greedy, they were taking so much money. Plus, what did we say? That do no harm, invest in a low-cost mutual fund. Massive ongoing trading is dumb. It's not going to work. And because I give you free trading, what are you going to do? You're going to sit in your basement and trade. And so, to me, the SEC, they did sanction Robinhood for that. But the question is, Robinhood is still making all their money in payment for order flow and is still trying to encourage their investors to basically follow everybody off a cliff. Because when you make money in trading, this is how it happens all the time. It happened to me when I tried it younger. You make some money and you think you're a genius, right? You're not a genius. The market was going up. So then you say, I'm a genius. I'm going to go on margin now and borrow money because this is so easy. So I'm not going to borrow money. And you know what's going to happen? I'm going to lose all my gains and I'm going to lose all my money because I was on margin and I'm forced to sell it. And that's what happens. And you find out that you can't beat the market. And particularly when you're an individual sitting in your basement who doesn't have the access to information that the Wall Street guys do. Those are the kind of, to me, the SEC should be protecting investors, doing more stuff up front, force Robinhood to disclose exactly what free trading really means, and to disclose that they're not screwing their customers by giving them an inferior price quote so that they can stuff money in their pocket. And these things really never seem to totally go away, unfortunately.
Jim, two more questions. Louisa asks, what have the undergraduate and graduate business schools done regarding teaching ethics in business? Did Bernie impact the way our future business leaders are trained?
What was the first part of that? Is there going to be an impact on business schools?
Or an impact on teaching ethics in business school?
You know what made me laugh? I'm doing a virtual Zoom to the entire Choate alumni body in June, and a guy who was at Choate asked if he could join the panel because he did research with a Harvard professor who talked to Bernie. So he's an expert. Well, guess what? I happened to talk to Bernie about that Harvard professor. He's a professor of ethics in the business school at Harvard, and he lied to Bernie by taping his calls without telling him, and wrote in his book that Bernie, he asked Bernie about Andrew's death, and he said that Bernie spoke about it for half a second and then switched to interest rates. And this was an example of how sociopathic Bernie was. So I asked Bernie about that, and Bernie said that first off, the guy told him it was an interview about ethics, not that it was about directly the scheme, not that he was taping him either. And also, he said, Jim, I was on suicide watch for the prison when Andrew died. So this guy's an ethics professor. And I intend to pop this on this guy at the Choate thing, which I'm sure going to come as a bit of a surprise. But Dennis Kozlowski and Jeff Grant, who you know from Greenwich, probably a lot of you, this same professor interviewed them too, because he was a book on white collar criminals. Both of them had major problems with his ethics. I found the guy to be nice. I interviewed him on my show. But can you teach ethics in business school? You should be able to. It needs to be ingrained in the culture of the school and in the course, in the entire course, though, not just one course that looks like they're, trying to stuff it. I went to business school at Dartmouth, and it's a very small school, and it is very culturally focused on team play and doing the right thing and not backstabbing each other and all that kind of stuff. I can't speak for some of the other schools. You know who I'm talking about.
And Jim, it looks like this is our final question from Sandy.
Okay.
Did you find your entire experience surreal?
You know, somebody, I think Jim Axelrod or somebody asked me that, like, first off, all of a sudden, and this, I've never been able to fathom this. I find myself in 2011 suddenly emailing the most vilified criminal in the entire planet. And it boggles me to this day. And the other thing, there's a recent thing is you know, that Catherine Hooper, Andy, Ruth, and Bernie all trusted me with their legacies, none of whom knew me and knew anything of me and knew that I was going to pursue the truth. So it is totally surreal. First off, you heard me get total luck getting to Bernie, right? Total fortuitous luck that Bernie dies right before the book comes out, and I'm on CBS with 6 million viewers. And now Netflix is interested in this thing. The Netflix director told me that if I go with him, this documentary will be seen by 100 million people in 28 days. I mean, it's totally surreal. The director, who's the top director for true documentaries, is saying, Jim, my people say I have to get your book. And I'm sitting here saying, something's wrong here. I'm a first-time author, and this top director is basically begging me to to work with him. Shouldn't it be the other way around? Shouldn't I be like, begging the guy? So it is surreal. And I do hope, though, my dream was more than any of this other stuff, was that this would be the definitive account of this story, and that the true untold story and that failure, the system failure, all of that would come out, because it hasn't come out. And I think fortunately this will end up being it, in part because Madoff has passed away, so there's going to be nobody else that's going to be able to get into that side of the equation, and nobody else has tried to tackle the other stuff. So hopefully this book will sit as that. One of my idols is Bethany McLean, who wrote the book on Enron called The Smartest Guys in the Room, and that book is like, and Peter Elkind co-wrote that, who's also a friend. Bethany did a blurb for my book on the back. I wanted this to be sort of like that, and I can't pretend to be Bethany. She's brilliant and written multiple books, but this was kind of my hope, that I might be like in the minor league, with her, and that's what my hope is.
Thank you so much, Jim, for joining us. We're so lucky that we got you before it seems like you're going to be a very busy man for a very long time with this book.
I love this. Is Old Great. It's my hometown.
Well,
and,
we're so lucky.
I would do anything for Louisa. Anything for Louisa. Anything. It's incredible.
Thank you so much. And we hope that someday we're going to be able to host you in person at the library. Thank you, everyone, for joining us. Good night.
Thank you, everybody, for coming out. Take care.
Bye-bye.